Good morning, good afternoon, good evening, folks. We have him back. He was on a week hiatus for Mother's Day, all of that good stuff. So, Dan, how you doing, buddy?
I'm doing great. Yeah, I was in Boston visiting my mother for Mother's Day last week.
That's
And
awesome.
I have to tell you, up there, they think it's summertime. It's winter. It's winter.
As a Florida boy.
It's 50 degrees up there. It's winter time.
It's winter, man. It's winter. Hey, one thing I want to celebrate you for is you have been calling for months. And yes, folks, Dan has a playlist. Go back and watch it. That we were going to test a support at 38.50. And on Friday, dare I say, you nailed it. It was 38.58 by my memory. So I want to thank you. And I don't know if you take the time to go back and look at comments. I had dozens,
I have not, but I may start doing that actually.
I've had dozens of people comment on videos saying they took action because of you, and say
I've had a few people send me that note in my email from people that are on my mailing list.
Yeah. So again,
a couple of times, one lady said, "Thank you so much. You've saved me a ton of money."
Yeah, it's a good feeling. So I just wanted to thank you for coming back every Sunday. Again, we did this because you wanted to teach me a new skill. I'm seeking to be better at reading charts and removing emotion. You have helped me make my first profitable trade in 15 years. So thank you, thank you, thank you. And oh, by the way, looks like we saved some people some money. So that's got to be a good feeling.
Yeah, it's a great feeling. I shared my screen. Can you see it?
I can. So yeah, 38.50. Tell us what we're looking at.
All right. So way back here, when we started, I said we were going to probably start coming off this high, which is right at the very end of the year. And I thought we were going to come down dramatically. So I was saying that back here, but I didn't really have a target at that point.
Right. It was
until we got here early February, when we hit this peak and started back down again, and then couldn't get back above it. So that's called a head and shoulder pattern.
Okay.
So you've got a left shoulder over here. Here's the head, which is at the high. There was a right shoulder here, and then we made another one over here.
Okay.
But I made the call here on this one.
You did
early February.
And people can go back to your playlist and see it. Yep. Right.
And I said the way that technical analysis works on patterns like this, every pattern has a symmetry to it.
Correct.
So you take the head, you look at the neckline. So that's the left shoulder right here. It ended right here. The right shoulder here ended right here. 4,300 was a very important support area. That's basically the neckline.
Okay.
So you take the distance from the head up here to the neckline, which is 10.3%.
Yep.
And then you calculate 10.3% to the downside, and that puts you right here at 38.50, which also just happened to be 20% off the high, which is the definition of a bear market.
And again, I want to highlight again, sometimes we just need to take a bow. The fact that you called this in January, at least when we were talking, people can go back and watch the playlist. You were pointing at 38.50 as the number when it was still in like 4,400. And I'm sure some people were like, this guy doesn't know what he's talking about.
We're at 4,600 up here.
Wow.
And this right shoulder was 4,600.
That's amazing. That's amazing.
And especially the BTFD people.
Yep. Oh yeah. The buy the dip. Oh, I had them on my channel. Believe me, I saw the comments. Some of them were so bad I had to delete them. I don't generally delete comments except if you use swear words and are just derogatory. But you were right. I want to say one more time, you were right.
The whole point of trading is not to be right. It's to understand probabilities.
Well,
that's what this is all about. That's what
that's what you're teaching me. That's what you're teaching me. But again, dude, you were right. Let's just own that for a minute, okay? I will tell you when you're wrong. Also, not today. You were right.
Yeah. So I actually circled this area down here between 3,700 and 38.50.
Okay.
As the potential target.
Yeah.
Now 38.50 was the almost the exact symmetry from the top, but markets have a tendency to overshoot.
Yeah.
So that's great. And I'll show you some things of why I think it was so oversold down here that it almost had to bounce.
Yeah. And one of the things that I want to highlight here that again, that you're teaching me, and again, tell me if I'm wrong, is you are not the only person to see 38.50. Your
Right.
logic here is tried and true, um, and understood by all the macros and all the other kind of Wall Street firms. So a lot of them had in their charts to buy the 38.50, right? To buy that bottom.
Yeah, that's the algorithms kicking in.
Exactly. That's what I was
Now,
looking for. Algorithm.
now the all of the big, hedge funds and Wall Street firms, they have technical analysts on their
Yes.
staff.
Yes.
So they're doing exactly the same thing that I'm doing right here.
Yes.
And they've got probably a lot more experience doing it than I have. But
Fair.
that's the reason. And, people sometimes say, charts, technical, you try to predict the future. You can't do that with the market. It's hocus pocus. It doesn't work.
Yeah.
And all this. Well, the reason that it works is that everyone else is looking at it.
Exactly where I was trying to go.
That's why it works.
Yeah. And that's why you could see, frankly, buying at the open tomorrow, probably.
So what we need is a confirmation day. We need,
Okay.
Monday it will be really important. We need something to confirm this rally.
Okay.
Now, it was interesting on Thursday, we went right down to 38.58.
Yes.
And in the afternoon, if you're watching, you can kind of see it here in this red bar.
Yeah. Shot up.
We opened here, we went all the way down to 38.58 and we closed above the open.
Yep, we did.
So we had a huge rally in the afternoon. The rally continued on Friday.
Yes.
Continued on up. Now we want to see that continue again.
Okay.
I'll show you why it was super, super oversold. So I think it will continue.
Okay.
But that doesn't mean the selling is over yet.
Oh no, I want to be very clear. I don't think again, bear markets are long. They're not a week or a weekend.
The average length of a bear market is 9 months.
Yeah. So this is
That's
what
the average.
This is what I see at the macro level, and it's going to be fun to see if the charts kind of play this out. I think what we have seen thus far, and please correct me if I'm wrong, is margin or multiple compression, because the earnings have in general been pretty good.
Right.
What I believe we're going to see over the next 90 days is a bunch of pre-announcements about earnings coming in low, and we're going to see the S&P 500's collective earnings be cut. You take that cut on top of multiple compression, that means a lower S&P 500 in my mind.
Yeah, I think that's true. It will be in the next month, what are we, the middle of May right now.
Yeah. Mm-hmm.
So the next 3 weeks is going to be very important.
I
think we're going to get a rally. I think we'll get a rally and then we may get another sell off. And then I think in June, and we've talked about this before, and I'm going to show you
perfect
my inflation chart.
Okay.
We had the inflation number this week.
We did. One thing I want to bring up about next week that I think is uber important, and I don't know if it hits your radar or not. We have a lot of big retailers report next week: Home Depot, right, Walmart, Target, Lowe's, Kohl's. We're going to get a sneak peek, not so much again about the consumer in Q1. I expect all of them, probably except Walmart, to talk about the future. I don't think Walmart talks about it's a standard. They don't talk, but maybe they do. We're going to see if people are cutting expectations. I think the consumer's in trouble. I do think we have one more blowout party in the summer, but I don't have faith in the American consumer. I think they're tapped out.
Yeah, inflation is definitely going to have an impact on them.
Yeah,
I think you're already seeing it, really.
I do.
I read something where restaurants are seeing less traffic.
First thing to cut. I talked about it on my daily financial news. The first people are cutting or eating out. 52% of people have cut eating out already. Next up was driving less. 43% are driving less. It's bad out there. It's bad.
Yeah, I'm going to put my newsletter
please do
up here if anybody wants to join it. It's free. It's just the research I do every weekend, and I send it out to friends and family and people on your channel.
Mm-hmm. That's awesome.
It's breakpointtrading@gmail.com. Just send me an email and I'll add you to the list. But you look at the cartoon in the upper right.
Yeah. That's
higher wages, people are getting paid more, but adjusted for inflation, they're actually making less.
No, I want people to hear that. I've been talking about that in daily financial news. There's nominal wage increase, and then there's real wage increase. You are nominally making 4.8% or 5.2, but real, you're losing 3%. Yep. If you are not getting at least a 10% wage increase, you are losing. And you and I both know it's very hard to get that at your current employer. So it is time to go to a new employer and get a pay raise.
Yeah, that's right. Since we're on this, and I included this, we can talk about this inflation chart that I
Sure.
do every month, every time the inflation number comes out.
Mm-hmm.
And I've been saying this for months as well. You and I have had this conversation.
Yep.
Understanding how the inflation data works, which is a 12-month rolling number.
Mm-hmm.
So as the number gets added, this is April, the one that we just added 8.3,
Mm-hmm.
then the previous April rolls off.
Yep.
And the ones that have been rolling off have been super low numbers.
Yeah, I think last April was like 3 something.
Yeah. And before that, it was like 2.
One, yeah,
there was 1.8 at one point.
They're right.
Those are all rolling off as this trend right here continues up.
Mm-hmm.
It's continuing up because big numbers are being added to the front, but low numbers are dropping off the back.
Exactly.
And I have been saying, and you can go back to this channel and see it again.
Mm-hmm.
I've been saying for quite a while that the April number, which is reported in May, and I actually wrote it down here. I haven't changed this down here.
Yep.
It says in April, reported in May, the lowest 2 months will roll off. This will show inflation May have peaked.
Yeah, this is something I was hoping we would talk about today because I actually have a controversial call that I started, I think it was Thursday. I now believe that what will be the May reading, which is our next report, is actually going to go back to 8.5. I think it's going to go up.
And I think it will go down. And I've got the estimate down here at 8.
Yeah, I think it's going up. I think inflation is broadening out. I think we're seeing gas go up where we saw gas go down. I just don't, again, I want to be wrong. Believe me, I want to be wrong. But if we see inflation tick up again, the Fed's going to have to go 75 basis points instead of 50 at their next meeting.
So that's interesting because unlike the last week's inflation report came out after the Fed meeting.
Next one's
before. The next one will come out before the Fed meeting.
Yeah. And if
the June report.
That's a very important point. It's why I said it that way. If the CPI reading comes out anything above 8.3, they have to go 75. Have to. And that's what I've been calling for.
And I don't think they will. I don't think they'll go 75. I think they've already telegraphed 50. And I think he's going to stick with 50. I think it's going to show a lower rate.
If it goes lower, 50 all day long. You're right.
Yeah. Now this one on the left-hand side, the red one, this is the actual.
Yes.
This is not estimated over here. This is the actual number. And you can see over the last 12 months, for the first time, it's declined.
Correct.
Now, one data point does not make a trend.
Correct.
All right. So we have to wait to see what happens in June.
Validation.
But if I'm right, and if these estimates, which is basically based on Fannie Mae's estimate for the whole year of 6.6, so I've distributed these in order to come to 6.6 here.
Totally get it.
If this is correct, this is what it will look like. So in July, it will look like this. And by, December, by September, October, it's going to look dramatically like it's coming down.
Yeah. And
what I think is going to happen here, and here's where you and I differ. What I think will happen is we will get something lower than 8.3. I don't know if it'll be 8 or in the 7s or 8.2, whatever, but lower than 8.3. It will confirm the trend. The market will get excited. The Fed will say, okay, we were saying before that it was transitory because we knew how this all worked. We knew that those low numbers were going to drop off. That's why we said transitory, but nobody liked that term, so we removed it. Now we've confirmed that we were right. It is transitory. And we are still going to raise 50 basis points, but we may pause future rate hikes.
Yeah, I would tell you that a lot of people are hoping you're right. There's a lot of people that are hoping the Fed gets, let's be very clear. There's a lot of people that have been trained that the Fed's going to come in to bail out Wall Street, bail out asset prices.
Yeah.
I think we have at a 40-year mark where inflation is a bigger problem. They give a rat's ass about inflation. I think you're right. I think everybody, I don't know about everybody. I think most people hope you're right. I think they're a data point that is going down. I don't know that the Fed's actually going. I don't think the Fed goes back to transitory. I actually think what they say is something that's even ballsier. I think what they're going to say is, see, what we are doing is working.
Right. Yes.
We have control. Our reputation is back and stronger than ever. We are so good at what we do. No, jackass.
And we will continue.
It's freaking math.
Right.
Yeah. But I actually think and again, I've only been saying it for about a week. I now believe that inflation in the May reading is going to go up, which will blow things up.
All right, we'll see.
Yeah.
So I hope I'm still on your channel after the next one.
Oh, you will be. You and I go back decades, man. Come on. So
look at the December number, 4%.
I actually don't think that's a bad guess, even with my call that it goes up. I don't know that that's a horrible guess. I mean, that's picking a number. But dude, I got to ask, 3850. I want to ask you what the lotto numbers are. You can tell me that on the side privately. But where are we going? Where's the next support? What is out there? Because I think we have more pain ahead. But I'm wrong all the time. What do we got?
So I don't have a clue. I have no
awesome.
idea.
I love that answer.
I don't make predictions. I have no idea where it's going to go.
Oh, that's so honest. I love it.
I will say that we are super oversold. I had this up here. This is my newsletter again, but I put this in the newsletter. This is from VectorVest. These numbers here, this is the buy-sell ratio, 0.06, 3 days in a row last week.
Wow.
0.06. It can't get any lower than that.
Wow.
When it gets below 0.2, that's when you start looking for the bottom. That's when a rally occurs. This was at 0.06.
3 days in a row. Wow.
3 days in a row. And the MTI, the trend indicator, market trend indicator, was if it's below 0.6, that's when a rally typically occurs. And it was at 0.36, 0.37, 0.39.
So if I
super, it can't stay there.
Yeah. So if I were to call Friday a dead cat bounce,
right?
Is that kind of possible given what you just showed us?
Absolutely, that's possible. That's why I said we need a confirmation day.
Okay.
We need Monday to continue the rally.
Yeah. All right. Well, okay.
So let's look at a couple of charts that I have here. This is my reversion to the mean chart. This is these shaded areas are, each one is an average true range. So the darker one in the middle, that's the average range for 1 day. That's what the S&P typically trades in 1 day. The next one is 2 times average true range. So two times the average daily range. And the third one is 3x. You can see it very rarely stays in the 3 area very long, even on the upside. It doesn't stay there very long. We got down there on Thursday. All right. So reversion to the mean would put us back to the center line at 4150.
Okay.
So I think we're going to go there, and then we'll see if we get rejected and we start back down again. Okay.
Got it. Okay.
You can see the accumulation distribution with the big rally Friday and Thursday and Friday started to come back up again. So that's positive. All these things are positive. You can see the RSI, relative strength index. Usually when it gets down to around 30, that's very oversold, and it usually bounces and starts back up again. So that's going back up. All of these indicators are starting to move back up. So I think based on this, we probably will get confirmation, and we will get a rally, a couple of days worth of a rally anyway. And then we'll see if we can break through this 4150 resistance level.
Okay.
All right. So that's the thing to watch for. This is from 2009. This is a really interesting chart. I actually put this out on LinkedIn this morning as well.
This is what we looked at this, I don't know, 3 or 4 weeks ago when I asked you how would you know if you were wrong, secular bull versus bear? This was an interesting chart.
Yeah. You said, how do you know when you're no longer in a secular bull market? Secular bull market, and you can go out on investopedia.com and look up secular bull market. It will give you the definition. It's a long-term trend that will have short-term corrections inside of it. All right, so this one started in 2009. That was the bottom. Technically, it probably started in 2013 because this is where it broke out of the high, the previous high, and the market ended up getting to new highs. But if you do it from 2009, here's the line, and it needs to get down here below 3,000 in order to break the secular bull market. Now, the interesting thing is, as bad as the sell-off feels, and as bad as it looks up here, look at the percentage.
It's not all that. That's what this is the beauty about index investing versus being too hyper-focused like Kathy Wood, right? There's a lot of stocks that are 70 and 80% down. but
Yeah.
the index is 20. It's not even today. It's not even 20% below. It's not even in a bear market.
Right. That's right. It touched it. 38.50 actually is a 20% level.
Yeah. Yeah.
It touched it.
19.9% is technically.
Right.
I looked it up.
And you can see in this whole period from 2009, we had a 21% decline. We had a 15%, a 20%, a 35% for COVID.
Mm-hmm.
So this is normal.
Yeah.
This is a normal correction. This is what markets typically do.
I totally agree.
And by the way, now that I'm on this topic, I want to give your listeners a little gift today.
Ooh.
If you go to stockcharts.com, which is what I subscribe to, but you can get on there for free as well. Go to stockcharts.com. That's where all these charts that I show you come from.
Okay.
All right. And go to this link here called articles. And it will show you all of the articles from all the different people. Go to Tom Bowley.
Okay.
This guy right here.
Tom Bowley. Okay.
And read this one right here that he just posted this morning.
Okay.
This is brilliant. This guy was he was a CPA for a major mutual fund organization, and he would do fundamental analysis on companies. He would help the traders understand what the fundamentals of the companies were and help them pick the right companies. And he was really good at telling them when to get in, but he could never figure out when to tell them to sell until he discovered technical analysis.
Interesting.
And then he started using the technicals. But here's what he says. This is not a long-term bear market.
Oh.
Improving signs are underway. And he says here, you know, there's a lot in this. You know, he talks about Peter Schiff. You can be like Peter Schiff and call for a market collapse every time you open your Yap.
Yes,
but
exactly.
But I'll gladly decline and be right 75% of the time.
Yeah.
So ever since 1950, the S&P has risen on an annual basis 54 years out of 72.
Oh, there you go.
All right. So, and then he lists all the things that people are talking about: the debt, the Fed, inflation, higher rates, housing bubble, stock market bubble, Russia-Ukraine war, crude oil prices, all of this stuff. But the biggest issue of all had nothing to do with any of that. To be most of that is noise. It's media banter. It's what everyone's talking about right now. I hate to see portfolios ravished over 4 or 5 months, but quite honestly, this is exactly what the US equity market needed, a breather. And then he uses technicals, and he's brilliant at doing this. He says, look, since March 23rd, that's a 451-day period. So I put a 451-day rate of change on this chart from 1948. So this rate of change down below is 451 days.
Oh, I got you. Yep.
All the way back to 1948. And you can see what happened right here.
Yeah, we went over.
Right at the end of last year. And go back to 1948 and pick out the number of times that it did that.
Yeah.
None. It's never done that.
Too much money chasing too few goods.
Never.
Never, ever.
We had simply run way too far.
Yep.
Pandemic introduced a whole new set of investors and traders to the stock market. This group only knew one thing: higher prices.
Buy the dip.
Yep, buy the dip. And this is, I've showed this one before. This is the put call ratio right here. You can see all the way back to 2005, it never really went below 0.58. Well, during the pandemic, when all of those Reddit traders came in, it went way down here. It has never, ever been that low before. Never. That means there are no sellers. There's nothing but buyers all the way down.
Yep.
This is a fascinating read. So go out there and read this one. This is the put call ratio right here. Again, you can see in 2014 for one day, it went below 0.4. Look what it did since the pandemic. Look how many times it was down here since the pandemic. And then go back all the way back to 2003 and see how many times it did that.
That's all the Reddit meme.
That's nothing but buyers. Nothing but buyers. So this is where we are right now today. So what he's saying is sentiment has to be reset.
Yeah, we got to wash them out. We got to crush them.
You got to wash them out. You got to have the sell off. This is a healthy thing for the market.
Yeah.
This is what the market is supposed to do.
Yeah.
And this is what it's doing.
Awesome.
So you need to understand how this works. This is my bottom finder chart. There's a lot of different things on here, but this blue line right here will show you, here's the RSI, relative strength, down near 30. Here's the stochastics, way below anything except for right here in 2022. This down here, this green one, is the bullish percent index, the number of traders that are bullish. It got way down here. It's never been down there before at 25. When it gets to its lows, that's when we get a rally. It's never been down this far before. And then the VIX and the put call ratio is way up near the highs. So we are definitely due for a rally. There's no question. You look at all of this and there's no question we are due for a rally. How long will it last? Who knows?
Well, it's going to be another one of those buy the dip. People are going to run in and it's going to reverse on
that. Very, very likely. I mean, we could get to 4150. We could get all the way back to 4300. But I think we will, have another test of these lows down here. This one here this red area down here are the percentage of stocks above their 50-day moving average. Okay. If you go all the way back, this goes back to about a year, and you can look to see where I actually put this pink horizontal line in here, where it's hit the lows each time, and that's where it bounced, hit the low and bounced, hit the low and bounced. We went below it for the first time. It's never been down here.
Wow.
The number of stocks was like below. It was about 15% of stocks were below their 50-day moving average.
Yeah. So what I hear you telling my audience, you called the 3850, give you plenty of credit. Right now, you're like, don't know. I need to watch this week. You'll be back next Sunday, and maybe we'll have more information. That's what I kind of hear you saying.
Yeah. Well, we'll see what this looks like a week from now. But I think the market is poised to rally.
Okay.
On one of our next sessions, I'll show you how I go find stocks that are beginning that rally.
Absolutely. We will do that in the next session. One more time, flash your newsletter, just in case somebody is listening on a podcast. It is breakpointtrading@gmail.com. Thanks, buddy.
You bet.